What's up, everybody? We're back with another episode of Bullish Chips, where we use a proven and repeatable strategy to make money every day. This channel happens to focus on the Bullish Semiconductor ETF, which goes by the ticker symbol SOXL, but the charting and the trading method that we use can be implemented when trading any company that's publicly traded in the U.S. stock market. So make sure you hit that like button if you enjoyed this video. It really helps the channel grow. Thanks again to those who continue to tune in and give us a thumbs up. Really appreciate that. If you're new to the channel, make sure you hit that subscribe button and the notification bell as well. That way you are alerted when we release our videos, including our bonus content. Now the nightly and weekend videos, like today's video, focus on identifying triggers and targets for trades ranging all the way from scalps and intraday trades up to long-term swings or leap trades. So if you want a deeper dive into exactly how we set up our charts, the trading levels, broadening formations, different color coding for the time frames, things of that nature, make sure you check out the bonus content on our YouTube page. So I do encourage you to watch the full video because along with triggers and targets, we do give some good insight into price action on all time frames. So with that, let's go ahead and look at today's agenda. For the weekend video, we will recap the price action from Friday, November 13th. We will zoom out like we always do and keep level sets, looking at the week, month, quarter, and year. Then we will take a look at the market maker's expected move for the week of November 21st. And then we'll zoom back in to set our 4-hour markers and the triggers and targets for November 17th, along with the week of November 21st. And then we will do a quick review of the triggers and targets for the for the month, quarter, and year. All right. Oops. Let's go ahead and get into the price action from Friday. And, we got, kind of beat down on Thursday, and then we had a gap down on Friday. So, short-term perspective, kind of oversold. And we were also hitting some very key levels that we talked about in yesterday and really the videos all week, because we've been, inside week all week until today. So these levels of support that we're talking about are the market maker's expected move low for the day and the week. They coincide with about the same level here around the $36 level. Again, the market maker's expected moves are not an end-all be-all, so the price doesn't have to reject or bounce or whatever when it gets to that level. But it does show, the market maker's expected move is a range where 70% of the time price will stay within that range. So it's calculated from the options chains and buy and sell orders. So you can calculate this out yourself, but we'll show you here in a minute how you can just get it real easily from the options chain. But also along with those levels, we've got the previous low of day, last week's low right here at 37.04, this purple short dashed line, and we've got the overnight low and last quarter's high right here at this 35.40, I believe it is, level. Right here at 35.50. One more level that got brought into the picture with the decline as well overnight is down here at the bottom of the page, the quarter flip, right? That's where the quarter turns from green to red. And also one more level we can talk about here is last month's low, right? So got a lot of levels of basically a zone of support here. That if we're not looking at it from such a minute time scale, you can see as a level of support. But for right now, we're just going to take a look at the intraday price action on this short time frame, because it's you kind of had to get in quickly at the beginning of the day if you wanted to get in. The 5-minute chart doesn't even show any type of high or low. The 1-minute chart, what we did do is watch that, and it showed it poked below but failed to continue to push past overnight low, which also lined up with last quarter's high. So while it goes against the general rules that we have for the repeatable strategy early in the morning, it's one of the nuanced layers that you can put on top of that basic strategy, right? So, and when we're talking about the basic strategy, if you're not familiar with this channel, what we do is we look for higher lows at or above opening print to get into calls, and we look for lower highs at or below opening print to get into puts, right? So here we had a low, but it was clearly a lower low from Friday because we're gapping down. So from that perspective, we're making a lower low, but it is right at opening print. So there's higher risk in the fact that we're in a downtrend. We're at the bottom of a downtrend and a lower low, but it does provide some reward, a higher reward for that risk, right? So we entered in some calls at this level at the opening print, basically just based off of the area that we were in, all this support, right, and the fact that we failed going below the the overnight low. We went ahead and took those up through the gap fill. We scaled out of 50% at the gap fill. We scaled out of another 25% when we made this lower high, or these big wicks kind of messed with the strat count, right? So when we saw the retest of previous low a day, just to make sure that we were, keeping our profit, we scaled out of another 25%. So we had 25% left. We obviously took that up to the 61.8 fib of the October range and pushed up a little bit more. There was a lower high and a lower low, and that's where we got out. If you stayed in a little bit further till you reached this, 4-hour downtrend line, I commend you for that as well. But I hope you took some profit on the way up. But we got out at this lower high, lower low, and basically for the rest of the day we just watched. Right, we don't trade real heavy on Fridays anyway, but at that point, you're kind of in no man's land, right? You had the gap down, you're back at previous low a day, you're up in previous day's price action. Let's go ahead and just bring up like a 15-minute chart, right? And if we look at previous price action yesterday, on Thursday, you can see this area was like an area of chop, right? You didn't just push straight through it or push down straight through it. We had some chop, and that's because we've got these fibs from October's range, as well as the 78.6 fib from the April low bull flag, right? So didn't want to get caught up in a bunch of back and forth. We did continue to look for a higher low, like on that 1 hour, to see if we may be able to repress this 4-hour downtrend line, these fib extensions, and try and maybe start to turn the 1 hour around. Maybe if we're oversold, at least from a short-term perspective, maybe get us a little bit more pop back up to, what would have been the 50% level of the previous week, but it would be next week. So, just around that area, which again, the 100% fib extension, 100% fib of the October range is up here at that level as well too. So seeing if we could press back up to those levels, but didn't quite get it, and kind of tapered off into the end of the day. Had a little bit of a pop at the end, but really just tapered off at the end of the day. So continuing to look at a 4-hour downtrend, a 1 day downtrend. Let's just pull up the 4-hour chart here, get a little bit cleaner chart. And we can see, right, we've got lower high, lower high, lower high, lower high. Or actually, that was lower high, lower high. This is where we got the higher low. That's what I was thinking about. Never got a higher high, though. Continue to get lower highs, then back to getting another lower low after lower low, lower low. Right, this was a quick higher low, but never got the higher high. So we're in that downtrend from a 4-hour perspective. Right, same thing from a day perspective. Right, we got lower high, lower high, lower high, lower high, and continued lower lows, lower lows, lower lows. So we're in a downtrend, right? So we did swing some puts for December monthly, just to have some skin in the game still if we're going to push to the downside. If we look at the go back to the 4-hour, we could have a 3-1 2 down reversal, to continue to push down on Monday. But again, finished on a inside candle. Although it was in the upper third of the candle, it was red. So kind of a neutral signal going into the end of the day. Again, we got a bounce so far off of last quarter's high, and just getting back into this support level, right? So we could see a little bit more downside action, and we did want to cover the calls that we have for December, January, and beyond with those December puts. If we take a small loss on those because we can continue with the pushback up next week, that's okay. We just want to make sure that we're covering there, but we're coming back to this major level of support. So we should expect to see price action go back to the upside. But again, we're not in the prediction business, so we'll have our triggers and targets ready from both sides, right? Again, we're just talking about from the day perspective. We're in that downtrend. It took us into this area of support. Could you say, you can't really say that's like a flag. Maybe this was a flag right here. There's a flagpole, and then you got the flag, but we're back down into that range. So we got to continue to see if we do get that bounce. Are we just going back to the top of the October range just to reject and come back down and get more sideways action? Do we pop back up into the early November price activity? That's going to be the key in my eyes, right? And we can see the market makers expected move for this coming week is right here at 44.32, which is just back at the top of the October range. So don't know that we would have our answer next week unless we drop below this level of support and then continue to push down with, getting a lower high. We've got the gaps down below that could act as magnets, but it still remains to be seen. We just didn't want to have too much risk on the table, right? We've got enough 27, 28 calls for that's 2027, 2028 calls. So just continue to monitor those, make sure they're staying in good standing, and then just play what we can intraday until we get a better feel of what we're actually going to do, right? Let's zoom out a little bit more and look at the week, because we did actually poke 2 down on the week, right? Actually, let's just get a clear chart here. Right, so we were hoping that last week was going to be a higher low because, again, we were inside pretty much all, well, not pretty much, we were inside all week until today. Let me make this a little bigger for people, right? We were inside on the week until today where we popped a 2 down. Did hammer back up, right? But not hammer back up, but push back up from the. We didn't close like in force with the 2 down, but definitely not a bullish candle, right? We can still stay neutral, but we can't stay as bullish as we were back in these months prior to last week, right? I'm sorry, weeks prior to last week. We got to kind of neutralize our stance here. Continue to watch the 1 day because. Right now we're not in any position to change the 1 day trend, downtrend around. So that would, seem to trickle over into the week where we would continue to push down further as well. So just got to continue to watch that. Again, we can come all the way down to 2350 before we make a lower low. We've got some gaps here that can act as magnets. So we've got to just try and, think about it from that perspective. It's not the end of the world. It's not the most fun thing to go through if you're just a bull and you don't play, puts to the downside or sell calls or anything like that. Can kind of stink to go through, but we've got these levels of support below. Even if we do push down and make a lower low on the week perspective to fill this gap, we're technically still at this, area of support where if we, just wick down and then come back up, we could find more support to move sideways and possibly find that push back to the upside at the end of this year, maybe even into 2026. But again, it wouldn't be the end of the world. You would definitely have to change your tone, and I would hope that you would be in puts at that point and selling calls. But if we do make that lower low and we do get a bounce, yes, it would be a good thing because you would think that we're probably going to continue to head back up, but at that point you got to start watching for lower highs. And then if the week trend changes to down, now you really got to think about, okay, do I even want to stay in these 2027 calls, or maybe, well, I don't know, but how, if you think about the 28 calls at that point, but even 2027 calls would be in question at that point because why go through the drawdown, especially if you're in profit, just to have to wait for those to come back to you, right? You can take that profit, use it with puts, you can buy more shares to sell calls, and do whatever on the way down, right? Who knows? We could have months of downside action, right? Or chop, right? Making lower highs and lower lows, especially on the day time frame. So at that point, you want to start looking at your 27s, but we're getting kind of ahead there, right? That's if we get down to that level. Right now, we just want to keep in mind that it's not the end of the world, especially from the week and up, right? Looking at the month, we are closer to going 2 down on the month, but what that would give us is a possibility of a higher low, but it also would have locked in a higher high at that point, right? So this was a soft high right here, so doesn't really count because it's within one candle, but the high that we needed to defeat was right here, that 35.75 level. We got above it, and then actually went above another high. So we've got a higher high in the sequence of the monthly trend. So even if we push 2 down on the month, right, again, we can get down to 2350 before making a lower low. And, we could just be starting this stair step pattern back to the upside. Right. So again, nothing to fear there. Just want to be prepared for the downside. If we continue to move to the downside, which again, buying puts, selling calls, those will be your friend, right? From the quarter, this is we've had to switch to a more neutral tone on the quarter because of the inverted hammer that we're showing here. And if we go 2 down in the first quarter of 2026, that actually locks this in as a lower high, right? And after a lower low, that's starting a downtrend from the quarter perspective. So we've still got a little bit of ways to go, but that's going to tie into the month as well. So that month and quarter, we're not too far from that quarter flip, right? Even if we flip the quarter red, especially if we can flip back green before the end of the quarter, it's not the end of the world. Doesn't mean we're going to go 2 down in the first quarter of 2026. We could just have what we call in the strat world a Momo shooter or a momentum shooter. A shooter is an inverted hammer. So that could just be a Momo shooter that we have here while we continue to push up in 2026. It remains to be seen. Again, this channel is not about making predictions. We're about analyzing the data and having triggers and targets set up in both directions so that we can respond whichever way price goes. All right. So still pretty good. We're above that 36.15 level. That keeps the 1 combo 2 down, combo 2 up reversal intact. So again, 36.15, 34.17, as long as we're above those levels, we're still okay from the quarter perspective. And then on the year, let's get things right. Not a 3-minute. The year chart, right? We've talked about this for a while, so it's nothing new, and there hasn't been a huge change out here in price. But we had the 1, 2 up, 2 down on the year that triggered earlier in the year, but we were able to make a higher low. As of right now, it was a higher low and hammer back up. So we're back green. Again, just want to continue to push up towards the end of the year to have the best chance of going 2 up next year, giving us a 2 down, 2 up with the magnitude of 70.08 on the move. Now, if we continue to push down through the end of the year, all right, now we start to neutralize again, right? And we'll see it on the week and the month and the quarter too. So we'll continue to talk about this every day. But again, right now, you may want to neutralize your stance on the market, but by no means do I think you should just flip it bearish. And even if you are flipping bearish, especially from like the day chart, how bearish are you going to be, right? We've got to get a downtrend started on like the week perspective before I'm going to get too bearish and start, calling for the first half of 26 not to be as, people expect, or whatever people want to say out there, right? I've got to see a change on at least the week chart, right? If we're getting pullback on the day chart, it's a pullback, right? You get 10% pullbacks multiple times a year, 5% pullbacks multiple times a year. So nothing to be afraid of. You just want to pick your spots to re-enter to the upside. Wait for the flips or the reversals to actually trigger, and then you can just get back in at a better location, right? So I think I've talked enough on the high time frames. Let's go ahead and zoom in a bit here, and we'll talk about the market maker's expected move. We'll go ahead and bring this chart up, right? And we can see that when we bring into the picture this this purple fib here, right? So activate this. If we're talking about this is last week's high, or the week of November 14th's high, the week of November 14th's 50% level, and the low of the week price action from the week of November 14th, right? So if we keep that in mind, and then we take a look at the market maker's expected move low and high, what does that show us? The high, they don't expect it to be higher than the previous week's high, and they do expect the low to be lower than the previous week's low, right? So that kind of gives you an idea of where the market makers think the move is going to go for the week. The way that we get the market maker's expected move, we just pull up the options chain, and here's Thinkorswim, right? If we look at the options chain for November 21st, we can look over to the right, and we see in brackets or in parentheses plus or minus $5.46 essentially, right? that is the market maker's expected move. So if you take the close price from Friday, 38.86, and you add $5.46, then if we switch over to our notes, we can see we've got the top of our range that would be here at 44.32, and that's over here on the charts, right? 44.32. And then if we take that 546 and subtract it from 38.86, we get 33.40, right? And so that's where we get our market maker's expected move range, right? 33.40 is the low, 44.32 is the high. And again, that would allude to a lower low on the week chart, right? Well, from a candle to candle count, right? Not a lower low in terms of a true lower low on the chart. It's just that next week's low is expected to be lower than this current week's low. All right. So now that we've talked about the market maker's expected move, let's go ahead and zoom in and look at our 4-hour markers and our triggers and targets for Monday. And we can see here, I'm just going to bring out the, oops, we're on the wrong chart. Let's go to the scalp chart here. And if we look at the chart, right, the first things that we'll have in play from the 4-hour markers perspective on Monday is the, oops, let's make this, come on now, the previous high a day up here at $40.60, which also kind of aligns with the previous week's 50% level. The overnight high, which of course is going to change before but between now and the open on Monday. The overnight low, which again will change, and then the previous low a day. Those are the major 4-hour markers, right? The last of the major 4-hour markers is the opening print, or the opening price, or the first traded price of the day, right? So let's say we get a little bit of push down in the after hours over the weekend, a little bit of push back up before we open, but we open within the overnight range, right? Overnight high is up here, overnight low is down here. If we open at this around this level here and we push up, and maybe we get a little bit of a rejection off of this fib extension and pull back down, but then we get a higher low at or above this opening print level, this opening price level, we want to look to get into calls, right? So if we get a push up, a pullback, but a higher low at or above opening print, we want to look to get into calls. And the first target will be overnight high, and the second target will be previous high a day. This is just purely from a scalping perspective early on in the morning. These trades can turn into day trades, right? But early on in the morning, when you don't have as much information from the current day to go off of to try and make a play, this is a strategy that's been tested and proven over time to have a high chance of making profit, right? Now, you got to follow the rules, and that will increase your, or keep your chances high. If you're out here breaking the rules of the strategy, then obviously your win percentage is going to go out the window. But if you follow those rules, you have a good chance of making a profit. And it doesn't mean that you are going to make money or big money every day. You may make a small profit. You may even take a small loss. But a small loss is better than a large loss, for one. And if you're following the rules, more often than not, then you're going to get stopped out at even or just a slight loss, right? So again, we open up. If we get price action to the upside and then we get a higher low, then we're looking to get into calls, looking at overnight high and previous high day as a target. On the other side of the coin, if we open and we push down, maybe we get we push down and maybe we get a bounce off of overnight low. All right, so if we push down, we get a bounce off overnight low and we push back up, but then we get a lower high underneath or at opening print, then we want to look to get into puts, first targeting overnight low as our first target and the second target being previous low a day, right? So that's just a simple, repeatable strategy that you can use at the beginning of the day to maybe get a couple wins early in the morning before you, really take a bigger stab at the market with maybe a bigger position off of a better trigger off 1 hour, a 4 hour day time frame, right? Now, if we do want to look for those day trades off of like a 4 hour time frame, let's go ahead and bring up the 4 hour chart here, and we can see that Friday there was a 3 and then a 1, so an outside engulfing candle and then an inside candle, right? Now the inside candle was the upper third of the engulfing candle, which leans a little bit more bullish, right? So there's a couple of options that we can, or a couple of things that can happen on Monday with the first 4-hour candle. If we go 2 up, that gives us a 3-1 2 up continuation, right? Your trigger would be the high of the second 4-hour candle from Friday, and the magnitude of that move would be the high of the first 4-hour candle from Monday. So not as much magnitude to the upside. You're also going to be dealing with last week's 50% level as a possible level of resistance. So again, not a lot of magnitude. You might have to, sit in it and really watch the charts on a lower time frame to see if you're going to stay in it till till it reaches the magnitude of the move, if it reaches the magnitude of the move. But you've got more to the downside, more magnitude to the downside if it is going to go to the downside, right? So if we go 3-1 2 down, then you enter obviously at the low of the second 4-hour candle from Friday, and your magnitude of that move is going to be the low of the first 4-hour candle from Friday. That again puts you in line with last quarter's high, 35.49, last week's low. You're just slightly above the quarter flip and the month flip and the market makers expected, or the month low and the market makers expected move low. So, even if we do go past the magnitude of this move, watch for there to be some support here for another bounce. Now that would be putting in a lower low after a soft lower high, right? This isn't a hardcore major high because it's all in this one candle, right? But it's a soft lower high, and then you've got this lower low. So if you go below that locks in another lower low, and we're just continuing that downtrend. To the upside, again, you've got last week's 50%. If you get past that, you've got this daily downtrend line that we're working with as well, right? So don't put as much weight into downtrend and uptrend lines, but when they start to coincide with our horizontal lines, then you got to put a little bit more weight into them. So if we really break and push up and we're testing this daily downtrend line, that's also lining up with last month's 50% level. So that's, we got to watch that level up here too, even if we do have a big first part of the day or even the big full day, right, to the upside. Now from the day, if you want to look at, again, a full day trade or even overnight swing trade, right? So this would be on Monday. If we get a 2 up, that gives us a 2 down, 2 up, the magnitude being the high of the candle to the left of this 2 down, right? So you enter here at the high of Friday and you would exit at the high of Thursday. Now there is a gap above that, a very, very, very small gap, but there is a slight gap above there. So you could see that filled, but again, it's lining up with last month's 50% level, this daily downtrend line that's even more recent. So look for price to if not reverse, slow down at that level. This is also the 100 fib extension of the April low bull flag, right? So you want to watch that level as a level of resistance. It's another reason why market makers expected move high is around that level as well. Okay, so you see how all these levels start to play in. Let's go ahead and look at the week as well, since it's going to be the beginning of a new week. And we'll see here, yeah, we got the 2 down, 2 down. Now, if we go above last week's high, that gives us a 2 down, 2 up, and that will lock in a higher low. So it would be definitely be bullish. And the magnitude of that move would be the high of the previous week. So 50.19 would be the magnitude of that move. So you would enter at the high of last week, 45.52, and the exit would be up here at 50.19, right? If we go to the downside, it's just more of this continuation. Again, watching for the quarter flip and last month's low as possible points of support. We've also got the 50 fib extension of that bull flag. We're on the week, so let me just show it, right? Here's the flag pull, here's the flag, right? And we've got our fib extensions throughout here. So this 50% fib extension is right here below these levels as well. So look for support at this level. Now, if we break through that, we've got the gap and last quarter's 50%, right? So the gap could act as the magnet, pushing us through and getting us to last quarter's 50%. And then that's another level of support, right? That's the top of the flag, this 11-week range that we were in from 24 to 28 back in, was that June through August? We were back at the top of that range now. So do we see support? Do we break through, wick through and close this gap before we get some type of bounce? Possibly, but just look for more support here at this level if we break through the quarter flip and last month's low. All right, so Let's go to just the notes here at this point and look at the hard numbers, right? So on Monday, November 17th, there'll be 30 trading days left in 2025. The close price on Friday, November 14th, was 38.86. We know what the what will flip the month green is 49.49. Now the quarter flips red at 34.17. We've talked about that level here today multiple times. And then the year would actually flip red not too far below that at 28.13, right? That's around that 23, or before you get to that 23.50 level, that would make a lower low on the week chart. But it offers an opportunity, right? If we go full time frame continuity to the downside where everything flips red, but we don't go too red, and then we, by the end of the year, we're not too red on, the beginning of the year, that gives us the ability for what's called a simultaneous flip, right? So if we're all red at the end of the year, if we go green at the beginning of the year, especially the first day of the year, that's the first day of the week, the first day of the month, the first day of the quarter, the first day of the year, that flips everything back green on that day, and that can be an entry point and a catalyst for the ticker, right? So even if we were to go full time frame continuity to the downside, we're close enough to the end of the year that I don't know that we would go too red, right? And that 23.50 level is that point that we can go to make a higher low on the week time frame. So I don't know that we would go too much further than that this year is what I'll say. I don't really predict things too much, but if we do flip the year red, I don't know that we go too red and start looking real bearish, right? I think we would hover around, making the year look like a doji, and still have the possibility of not only going full time frame continuity to the upside at the beginning of the year, but then still taking 2 up on the year, triggering the 2 down, 2 up, and still maintaining that magnitude, that target of 70.08 as the move. All right, so I talked about that enough, but our expected move once again is $5.46, giving us a range of 44.32 to 33.40. Right, we know where our gaps above are, we know where the gaps below are, and we talked about the scalping time frame at the beginning of the day. We want to look for higher lows at or above opening print to get into calls, and we want to look for lower highs at or below opening print to get into puts, right? Looking at the 4-hour time chart, we talked about a 3-1-2 down reversal triggering at 38.30. The magnitude of that move is 35.15. It is a pretty decent sized move, and we have those levels of support that we talked about before: the quarter flip, last month's low, last week's low, the market maker's expected move low. All of those are in the way of getting to that 35.15 level. So we did put some intermediate targets in there, right? We had a pretty good flush at the end of the week, right? Thursday and Friday. So if we are oversold and we don't quite reach the magnitude of that move, we've got some possible bounce points here that we can be looking for. Now, if we go to the upside, that gives us a 3-1-2 up. That would trigger at 39.69 with a magnitude of 40.60. So again, not a lot of magnitude on that move, but we do have some extended targets out here, right? Now on the day chart, if we go to the downside, it's just a 2 down continuation, triggering at 35.15, and we've got targets of 34.17, 33.40, and 32.83. Now, if we go to the upside, that gives us a 2 down, 2 up reversal. So we have a trigger and a magnitude. The trigger would be 40.60, but because we are in the face of a 1 hour, 4 hour, and daily downtrend, that magnitude of 42.64 might be a little hard to get to. So we've got our intermediate targets, basically levels of resistance on the way up to that 42.64. Just taking note of those as possible points of reversal, right? And then the week, like we just talked about, if we go to the downside, that does trigger a 1 combo 2 up, combo 2 down at 35.15. The magnitude is 34.17. And when we reach that, if we continue to push through that, that will then trigger a combo 2 up, combo 2 down, multiple actually, because of the 2 up, 2 up, 2 up situations that we've had on the week chart. It just compounds into 2 ups, combo 2 up, combo 2 downs with targets of 33.18, 32 flat, and 31.25. Now, if we do get that push to the upside and we get the 2 down, 2 up reversal that triggers at 45.52, the magnitude is 50.19. But again, we talked about the 1 hour downtrend, the 4 hour downtrend, the daily downtrend. We got to fight against those and the levels of resistance that we've talked about above. So we do have some intermediate targets on the way up to that 50.19 magnitude. All right, I won't bring back up the month, the quarter, and the year charts. You can rewind the video to look at those again. We're still inside on the month, right? We're getting closer to triggering 2 down, but we haven't quite triggered it yet. If we do trigger it, it is a 2 up, 2 down reversal, so it has a very clear entry and a very clear exit. The exit is 23.80, but the we've got an intermediate target of 28.93 on the way down. It's a pretty major level of support because we just talked about before what it would take to get down to that 23.80 level. We've got to, in my opinion, probably see a lower high on the week time frame in order for us to really trigger more downside action all the way down to that 23.80 level. But we've got it up there in case it happens. All right. Now, if we go, turn the month around and just push up for the end of the month and trigger the 2 up continuation, that triggers at 50.78, and we've got our extended targets listed out here as well. On the quarter, again, we triggered triggered the 2 down, combo 2 up, and reached magnitude of 36.15. That 36.15 then triggered the 1 combo 2 down, combo 2 up, which has a magnitude of 70.08, but that's a pretty big move. So we've got our intermediate targets here. We've already reached a couple of them, but we've got more on the way up, right? And then on the year, we did trigger the 1, 2 up, 2 down. At 23.50, we got down to 723, 724, something like that in April, and then we're able to reverse back up. So we put in a higher low so far, turned into a decent green hammer, kind of starting to doji out a little bit, but still hammer-esque. So looks like we've kind of turned things around on the year and just want to continue to push up at the end of the year so we can get that 2 down, 2 up and look for that 70.08. All right, so there you have it. Those are the triggers and targets from everything from a scalping perspective all the way up to the 1 year chart. I hope everybody has enjoyed this video. We tried to jam in as much information as possible without taking up too much of your time. So we do enjoy or appreciate you hanging with us through the whole video. We hope the information was all beneficial to you. If you enjoyed the video, make sure you give us a thumbs up. It's free. The channel's free. We're not asking for any donations or memberships or anything like that. We don't sell anything. So we just hope that you could return the favor and give us a thumbs up. Again, it really helps the channel grow, and we just want to get this information out to as many people as possible, right? Well, like we end every video. Well, this is a weekend video, so it's a little bit different, but depending on when you're watching this, hope you get some good rest over the weekend and are ready and refreshed on Monday. If you're watching this Monday morning, hope you had a great weekend and you woke up refreshed this morning, and we look forward to getting out there and trading with you.